Good morning. It's December 7th. It's 8:45 a.m. Eastern Time. This is Critical Point Podcast, the morning brief of the stock market. We did not do a weekly update over the weekend. I may do something earlier this week, but really not much has changed. I think we're in a long-term bull market in the end of this decade. I think we're in a minor long-term bull market for next year. And then, of course, we're going to trade all the twists and turns here that the model keeps track of relative to those 12 major groups that really run the show during the year. They run the market. All right. At any rate, here's our intraday chart, and we really don't have much for fresh economic news here. Yes, there's always some negative bearish factors. Yes, the virus is a concern. It's once again shot to record highs. And my model's saying, boy, there's now alternate scenarios. Maybe it's going to remain bad in the January, February, but maybe we can have a peak here this month. My guess is if it's still rocketing higher by the end of this month, the first week of January, then it's probably going to be up in January as well. No fresh news on the vaccines and how that's developing, and there's no news on the stimulus. All right, on balance, however, it feels like the economies are still growing around the world and for the U.S. Okay, so what we have is the intraday chart. We have a level 4 bottom as of December 2nd. And we thought maybe we had a bottom Friday, but that was the earliest allowed. And right at the moment, the model's saying, no, it could have bottomed overnight here. And the trend will now be up into tomorrow, if not Wednesday. And there is a chance, however, it could set back now until 1 p.m. Eastern Time. It could, in other words, test the overnight low here yet and then move higher. And that's a tricky situation because ideally, yes, it should have already bottomed for this level 4 trend. And I think they did overreact overnight here. So I think this is a little buy the dip opportunity maybe for this week or something. But we'll have to see. I mean, if they're willing to, during the day, trade it above 36.93 for the December futures, I think you want to go for it, that the level 4 trend is probably up into tomorrow, if not into the following day, okay? But I just can't rule out some weird thing where they knock it down one last time this morning before going higher. Okay, but ideally, we can see the indicators pulled back to mid-range. That can be a secondary buy signal. Yes, it can also just be a secondary level for more supply, more selling. But I'm going to go with the idea this market's going to be higher by tomorrow, and I think it bottoms this morning, okay, if it has not already bottomed. So that's our level 4 scenario. So now let's move on to the daily chart. And for that, I think I'm going to switch over to the newest continuous chart that's actually anchored on the March futures. And we can see that, yeah, level 4 bottom is due today. And that we ought to have a little blip up tomorrow, ideally maybe even into Wednesday. We can see we got a record high, which is really too long for a level 3 top, in my opinion, but there could be something going wrong here that we are going to get a pullback this week on into the start of next week for the level 3 trend. Now, the level 3 trend is a series of those level 4s. It's also how we do business during a month, whereas the level 4 is how we do business during a week, okay? And also the level 4 is how we do business during a day, intraday stuff. So I can't rule out that the market is going to correct this week on into next, and it may be that last minute pullback for something even larger, and that's the level 2 bottom that is due this week to maybe the start of next week for the latest. And as I've done is I've thrown out waiting for the level 2 pullback. I don't know as it matters. We got a strange behavior on these larger trends. So what's the level 2 trend? Well, it's a series of level 3 and level 4s making the larger fluctuations, say, during a quarter of a year, not necessarily a calendar quarter. Basically, it's like 3 or 4 months, something like that, okay? So, and that will be a component of still larger trends, level 1s, which can get us semi-annual, and those level 1s are the most important trend for timing and tracking of long-term trends lasting years, decades. And by the way, the level 1 is more likely, one of those level 1s during a year is more likely to be the high of the year and the low of the year. okay? Now, on a daily basis, it's overbought. It's trying to roll over for a sell signal. So if the market wants to close lower today, I will be concerned of this scenario that it wants to pull back for a level 3 bottom, and it could pull back for maybe 5 trading days, maybe 7. I doubt it will pull back for 10. But we could be up against something where we're finally going to get that level 2 pullback, and there's more downside than I realize. Right at the moment, I think we've been going through a running correction over the past 7-10 days here. I think it's surviving the 5-day average as support, and I think it's just going to trend higher into a level 3 top that ideally probably won't occur to next week, meaning this can be an up week, believe it or not. Even though the market's overbought, even though there's a lot of people saying this market has stayed up for too long, too high, there's complications and problems. I get that, but I think we're going to see this market stay up too high, too long many times this decade, okay? It's just a different scenario on a long-term basis. We're going to see overvaluation maybe for decades for all I know, something bizarre here, all right? So I think they're really bullish. Again, if you don't like what I'm saying, you think it is going down, I'm fine with it. But if it trades over, say, today's high, the overnight high at 37.05 on the March futures, I think you have to consider the level 4 bottom. The swing is up, and I think you have to consider the level 3 trend is up this week instead of down this week. But it can go either way. I'm just telling you what I think the bias is. Now, the market came to a high of 37.05, and we have an upside objective around 37.08, so it did come close to the lower objective. We also have an objective 37.48. Now, we have much higher objectives than that because what we're saying is we think the market is zigging up to a level 3, zag for level 3 low, up to a level 3, down for level 3, up. This process is going to continue into mid to late January, okay, when we think we're going to get the more important level 2 top, and we just, level 2 and level 1 tops, we just feel like the level 2 top bottom due now is just not going to work. The market's just not going down. So here again, I want to switch to the latest continuous chart anchored to the March futures. So this is the weekly chart. We're zooming out. We're trying to simplify things and try to focus more on those more important trends. So we think, yes, the market could drop. It could drop severely this week and or next, and then finally get on its way of moving higher again. But we think there's a good chance it's just going to get more overbought. It's going to hang in there. And if they were to pass the stimulus, there could be a bit of a surge. Now, if they pass the stimulus and the market doesn't surge, in fact, it starts going down, that would be a sign of quite an overvalued, overbought market, that we're having a problem finding new buyers, fresh money, and we've dialed in a lot of the bullish news, okay? And then it may be time for a correction. But ultimately, we see this market moving higher, okay, with the potential maybe by late January to be at 39.93 to 41.79. But it could be anywhere within a range of right about where it is now, meaning it might just chop around. It might go higher, come down, and then make a failed high that it doesn't go high enough, and it tops out in this lower end of the range, but it might even be as high as 4,200s. Okay, so we think record highs are coming here, even though we realize it's overbought. We may be making a severe mistake here. Now, the thing is, the high overnight put the market 1 week later than allowed, even with the extra week we throw in called the gray zone. So by all rights, the trend of highs should be higher into late January. The level 2 downswing shouldn't work as well as in the past. This market has gone too long, and it's saying the level 2 top didn't work. It was just temporary, and we think it actually occurred 3 weeks ago, okay? And we think this market is just going to march higher as far as swing highs. But we still can't rule out a drop maybe as low as in the 3,500 area, okay, before moving higher, that it can show one last minute respect for that level 2 low, because it's not too late for a level 2 low. But it is too late for a level 2 high, meaning the swing high. So we have an uptrend, and inside of it you have these little fluctuations, and the highs are called swing highs, and the lows, of course, swing lows, and the definition of an uptrend is higher highs, higher lows, higher swings, okay? And we're getting that. But again, we can't rule out a last-minute setback that might be sizable and be a disappointment for this latest forecast. to put in that level 2 bottom, and then it will just move higher. But the fact is that it's now too late for the level 2 top does limit that amount of downside. I really think if they want to sell it hard, they're not going to sell it down into the 3,400s, 3,300s and lower, okay, which would have been feasible a couple of weeks ago, but they're not going to do it. I think using reverse modeling, the idea that this is probably going higher into late January is a sign we're going to get more bullish news than bearish, or if we're not going to get change in that direction, that for some reason the marketplace, the overall people investing here, trading, are going to flip their bias towards the bullish of the bullish-bearish list of fundamentals and ideas. And there's always bullish and bearish at the same time. So if they're just going to flip to a bullish bias, this could be a struggle higher into late January. But if we actually get some new bullish developments, such as maybe the stimulus package, if it gets voted in, then that could make it even more bullish. So we're going to go with these upside objectives as still possibility here going to late January. If it's not that high, I'm fine with it. What'll happen is we'll get a sell-off in January to early Feb, somewhere's in there, and then we're just going to get another run up and down and zigzagging, but basically higher into summer. Because I think 2021 is going to be a bullish year, and I think it fits into the long-term bull market into late this decade. So that's our scenario here. Yes, the trade below last week's low at 3592.25 would be a concern, a caution flag, but we probably will not give up on the idea the market will be higher in January. Trade above the overnight highs, I said before, at 37.05 on the March futures, okay, would likely be a sign, yes, this is extending. Yes, we have a chance to work higher into January. Manage your risk from others, and thank you.